This IT contractor earned $360,000 over 3 years, and he thought he was crushing it on tax. Then the CRA reassessed him and handed him a bill somewhere between $160,000 and $200,000. His one mistake, he had one main client. Welcome back to the channel. I'm Hassan from Spectrum CPAs, and I need you to really hear this because it is quietly wrecking incorporated Canadians right now. If most of your income comes from one client and you invoice that client through your corporation, the CRA can label you a personal service business and claw back almost everything you thought incorporating was saving you. So in this video, I'm going to show you exactly whether this is you and what to do about it before it's too late. Let's dive in. The term you need to burn into your memory is personal service business, a PSB. The CRA calls it an incorporated employee, and it means exactly what it sounds like on paper. You're a corporation, but in reality, you work like an employee for one company. And here's the punchline. If that's you, incorporating doesn't help you. It hurts you. So how does the CRA actually decide if you're a PSB? It comes down to a 5-factor test. It's called the Wiebe Door test. Let me walk you through all 5. Number 1, control. Who decides how and when the work gets done? You or them? Number 2, tools and equipment. Do you use your own or theirs? Number 3, the ability to subcontract. Can you send someone else in your place, or does it legally have to be you? Number 4, financial risk. Can you actually lose money on a job, or are you guaranteed to get paid no matter what? And number 5, integration. Are you woven into their team like a regular staff member? The more you look like an employee across those 5, the more danger you're in. Now let me give you the red flags I look for in a client's file. One client makes up 80% or more of your income. You work fixed, full-time hours on their schedule. You use their equipment, their office, their software. You can't send a substitute. It has to be you personally. You're in their internal meetings, on their company email, part of their day-to-day. You've got no website, no business card, no separate business phone. Nothing that says you're marketing to anyone else. Your invoices look suspiciously like a payroll cycle, and you get paid the same amount no matter what, with no real financial risk. The more of those that just describes your week, the closer you are to PSB territory. And here's what it actually costs if you get reclassified. This is the part that makes people sick. You lose the small business deduction entirely. You pay the full corporate tax rate plus an extra 5% on top of it, and you can only deduct a very limited set of expenses. Basically salary and almost nothing else. Everything that made incorporating worth it in the first place, gone and applied backwards. Now you might be thinking, okay Hassan, but come on, how common is this really? Let me give you the CRA's own numbers because they're eye-opening. From 2022 to 2024, the CRA ran a voluntary PSB program. They reviewed over 2,100 corporations, and nearly 1/3 of them were actually operating as PSBs. More than 75% of those had wrongly claimed the small business deduction. It was concentrated in transportation and warehousing at 35%, professional and technical services at 26%, and construction at 13%. That pilot program wrapped up in June 2024, and enforcement going forward is now funded to the tune of $77 million over 4 years. Let me be blunt. They are coming for this, and they've got a budget to do it. So let me show you what it costs in real dollars. Let's call him Alex. Alex is an IT contractor making $120,000 a year with one main client. For year 1, 2, and 3, he pays that nice, low, small business rate at about 11.2%. So roughly $13,400 a year. Call it $40,000 total. He's feeling like an absolute genius. Then year 4 hits, and the CRA reassesses him as a PSB, retroactively. At the PSB rate, he'd be paying somewhere around $44,000 a year instead. So for those 3 years, he now owes the difference in back taxes, plus interest, plus penalties on top of that. The total bill can vary. It depends on how many years get reassessed and if the CRA sees it as a simple error or gross negligence. So it can range from $160,000 to over $200,000 on $360,000 he earned. That's the number I opened this video with. Now, is it ever winnable? There's one famous case. It's called the C.J. McCarthy case, where the taxpayer actually won and beat the PSB designation. But I'll be straight with you. That's the exception that proves the rule. It's not a plan you want to bet your business on. So how do you protect yourself? Let me give you the fixes. Best to worst. The best fix and the hardest is to restructure how you actually work for genuine independence. Control your own hours and your own methods. Use your own equipment. Get a contract based on deliverables, not hours, with the real right to subcontract. The second fix, diversify your client base. Even if one genuine second client at 20% of your income helps prove you're actually independent, but it has to be real, not something you manufactured on paper to trick the CRA. The third, act like a real business. Professional invoicing that doesn't look like a paycheck. Register for GST or HST. Get a website, business cards, a business phone. Keep records that show you're actually out there trying to win other work, and own at least some of your own equipment. Here's the nuance that trips absolutely everybody up. Write this one down. It's not about what your contract says. It's about how you actually work. You can have the most beautiful independent contractor agreement a lawyer ever drafted and still be a PSB. If day to day you look and act like an employee. The CRA looks at the substance, not the paperwork, which is exactly why fixing this means changing how you really operate, not just editing a document and hoping. If this made you nervous about whether incorporating was the right move for you in the first place, go watch my break-even video next. I show you exactly when incorporating helps and when it quietly hurts you. But first, if any of those red flags sounded like your situation, do not wait for a letter from the CRA to arrive. Book a free call with my team at Spectrum CPAs. We'll assess your actual risk, and if there's a problem, we'll build you a plan to fix it before it becomes a $200,000 problem. The link is in the description. Let's get to your questions. This one's from Daniel, and I get it constantly. Hassan, I already have just one client. Am I doomed? Okay, Daniel, deep breath. No. But you need to act now. The best fix is real independence. Your own equipment, deliverable-based contracts, the right to subcontract, and genuinely going out and finding other clients. And if you truly cannot restructure right now, then paying yourself a salary instead of declaring dividends is damage control, because salary stays deductible whether or not you're deemed a PSB. But understand me clearly, that's a band-aid. It's not a cure. You'll still face the designation, the back taxes, the interest, and the penalties. And one more, this is from Amara. She asks, what if my contract already says I'm an independent contractor? Oh, Amara, I'm so glad you asked this one, because it's the trap. I just told you, it doesn't matter nearly as much as you think. The CRA looks past the paperwork to how the relationship actually functions. So don't let a nicely worded contract give you a false sense of security. So if you've got one main client and a corporation, I need you to take this one seriously because the CRA very clearly is. Hit like, subscribe for more, and send this to a contractor friend who genuinely needs to see it before the next year end. It could save them their savings. I'm Isan from Spectrum CPAs, and I'll see you on the next one.